Stocks gained for the fourth week in a row, and S&P 500 and Dow Jones are approaching 52-week highs, while the NASDAQ and junk debt actually hit again 52-week highs. This is good for the stock market. We will also look at silver and gold, which is finally taking advantage of a dollar weakness, and let's see if there is going to be a reversal of gold and silver to the downside, or if there is not going to be a reversal. We will also look at natural gas, as a potential bottoming pattern might be forming sometime into January. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, November 24th, 2023. As always, hit the like button, subscribe to this channel, share this video, and enable notification for my videos on YouTube. These actions are what keeps this channel going. Thank you for them. If you are a subscriber, stay tuned. We're going to cover quite a bit of other securities. For example, crude oil and Bitcoin will be covered in the members only section. We will also cover various ETFs, foreign markets ETFs, as well as large cap stocks such as McDonald's, Travelers, Verizon, as well as some of the speculative securities such as Asana, Mattel, Marqeta, XPeng, Twist Bio, as well as Rush Street Entertainment, Interactive rather, amongst other. If you're not yet a subscriber, consider signing up by going to MasterChartsTrading.com and signing up for one of my products. On this chart, as always, I'm using my proprietary market breadth market indicators. You can see them on this chart, this green, blue, red, and yellow line. And this is pretty much all I use for trading. Right, let's look at S&P 500. This is S&P 500. Let's look at weekly chart first. So weekly just means each candlestick is 1 week's worth of activity. So notice on this chart, we are looking at 52-week highs being very close. I'm going to put in the line for 52-week highs. So 52-week highs are literally like a percentage point away for S&P 500. Notice also we have moved higher for the fourth week in a row. 1, 2, 3, 4. It looks really good. It looks like we might be breaking out to the upside. And well, just based on this chart, the initial target for this breakout, should it occur, is the depth of this pattern. It's pretty straightforward. This high from July of this year, and the potential breakout sometime, hopefully next week. It's about 12% depth. So at 12% depth, for this pattern, I would put S&P 500 somewhere in the vicinity of 5,000, 5,100. 5,100 most likely, or rather, will already be at new 52, or rather all-time records. And if that happens, then we might see a significant move higher. So we might be looking for a breakout of about 37%, so depth of this pattern from the high of January 2022 to the low in October 2022. That's about a 1,300 to 1,200 point move, and this could potentially put us at S&P 500 into 6,000 range or slightly higher. All this could happen very soon, provided we first make 52-week highs. So let's look at daily chart of S&P 500. We're literally this far away from new 52-week highs. We are 0.9% away from making a new 52-week high. So this is obviously very good news. I think pretty much 52-week highs or all-time highs is a definition of an uptrend, and we should be expecting more highs to come once the highs are hit. Looking at Dow Jones, this is S&P. This is Dow Jones ETF DIA, ticker symbol DIA. So notice that we almost hit 52-week high. So previous 52-week high occurred right there in August of this year, on August 1st. The high, this is the Dow Jones Industrial Average ETF, so it was at 354.32. Today we hit as high as 353.95. So we're about $1 away. So we're basically there from new 52-week highs. Notice also on this chart an actual alert that occurred here on November 3rd. We would be buying here. Why would we be buying? We would be buying on close above the blue line. So there's the blue line. Okay, blue line shows a good place to buy if we're in an uptrend. And this is already definitely we have our target. So this is already a nice 4.5% gain if you opened recently. Looking at NASDAQ QQQ, this is QQQ. QQQ hit a 52-week high. Last week, actually, on November 15th, so last week, we did make a marginal 52-week high. It was literally by like a point. But this week, we broke out two new 52-week highs. There's a close at 52-week high on November 20th, and then a new 52-week high yesterday on 22nd of November. If we look at weekly chart, we can see that we are approaching all-time highs. Okay, all-time highs are 2% away for NASDAQ. And again, I'm going to turn off my indicator for a second, but there's that pattern that I'm referring to. I'm going to draw it out. There it is. It's basically a cup and handle sort of pattern. So there's the cup, there's the handle. A breakout above the previous highs would be very, very bullish. And as I just said, if S&P 500 breaks out, we could see a significant move higher for stocks. Also, a good news this week came from J&K high yield bonds, as I keep saying. So this is high yield bonds, J&K. This is a weekly chart. We can also look at correlation coefficient between high yield bonds and stocks in S&P 500. This is correlation coefficient here down below the yellow bar graph. Notice that most of the time junk debt, high yield bonds, and S&P 500 are they move together in lockstep. So if junk debt, high yield bonds are hitting 52-week highs, then this is sort of like a bullish divergence. Before stocks hit 52-week highs, before S&P 500 is at new highs, we have high yield bonds, junk debt, junk bonds, JNK, all already at 52-week high. So to me, this is good. To me, this is showing that high yield bonds are leading stock market higher, and as a result, this is creating what's called a bullish or positive divergence between S&P 500 and high yield bonds. When this happens, I think in this case we will see stocks catch up to high yield bonds, and actually this is exactly what I wanted to see, and we're seeing exactly that. This is, in my opinion, once again, very good news. So we should be watching out for new highs. We should be watching out for good opportunities to buy stocks. We are long stocks. Notice this up arrows for junk debt. I am personally long S&P 500 and QQQ. I bought S&P 500 just very recently. Notice this. This is my buy signal right here where I'm hovering. On October 23rd, I bought SPY, ETF SPY at 423.49. It is currently at 455. So it's a pretty decent profit here. And I'm also holding QQQ. Here's my QQQ position, but NASDAQ, this one I actually bought close to a year ago in January of 2022, because at that time, I already pointed this out, I thought that this move down for stocks that began back in like April of last year, 2022, was definitely overdone, and we started rallying. So I went ahead and I bought. This is not exactly to my system, but I went ahead and I bought it, and it actually turned out to be very much correct. I'm still holding the position. So to reiterate, we are seeing stocks begin to make 52-week highs. Stock indices are also making 52-week highs, and we're approaching new highs, and hopefully soon we will actually break to new highs and continue towards all-time highs. All right, looking at dollar currency index. So a few weeks ago, I'm going to click, so notice this line with circles on it. So I put in this projection. This is a possible price action into January. I put this possible price action into January on October 20th, so over a month ago. I pretty much nailed it. Notice that the way the price came down, it's just exactly there. How did I know? At the time, so notice this projection of indicators. So at the time, the chart looked kind of like that. I'm going to turn off this for a second. The chart looks kind of like that, here. And I saw that the projection of indicators was kind of dipping into November. And usually when that happens, when my indicators show a dip, stock price will usually follow it in that direction. And indeed, it did just that. It followed the direction. So dollar currency index currently is, technically speaking, it's in an uptrend. The breakout for dollar occurred right there where I'm hovering on 26th of October. So from here on, I'm thinking, okay, dollar is in an uptrend. We want to be buying the dollar. However, we see in this pretty significant pullback, and in fact, we're now approaching this red line. So this red line would imply that this breakout into a new uptrend on October 26th would be negated if we close below it. So let me show you what it looks like. So for example, this is a situation that was back in November 2022. Dollar was in an uptrend. We were buying it. Then suddenly it continued, it started to drop, and where I'm hovering right now on the 12th of January 2023 this year, it dropped below the red line. Okay, and at this point we're saying, okay, no longer this dollar index is in an uptrend, it's now in a downtrend. Notice what happened later. We had a couple of opportunities to sell it short when the stock closes above the red line and then closes below it where I'm hovering. So for example, here on March 13th of this year, and then again on March 17th of this year, the stock closed below the red line. That's a sell short signal, and indeed it dropped pretty significantly lower. It bottomed out here in July of this year and went on a pretty significant rally, and then finally closed above the blue line. So at this point, once again, on October 26th of this year, I thought, okay, we're now in an uptrend. However, now I am, right now we're very close, to go towards the red line or to the blue line. If we go to the red line, then that's it. We're now again in a downtrend, and this breakout would be negated. However, if we close above this blue line, I think this would be a signal to buy the dollar. So very tense situation. I think into November, December, into end of November, into early December, unless dollar rallies quickly, we could be seeing dollar collapse, possibly even. Collapse, it's not going to go to zero, but if we close below this red line, we could just like break down significantly lower, like maybe to like this area. So about 6% or so before we see some sort of a bounce. At least we might retest these lows from July. So we'll see where this goes. Right now, dollar is kind of indecisive, but I have a bullish bias. So if anything, I'm thinking that we close above the blue line, we might actually continue higher from here. Up until recently, gold has not really been taking advantage of the dollar weakness, but all of a sudden we're seeing pretty, significant move higher. So for example, this right here on the 13th of November, a couple of weeks ago, notice that what happened is we closed below the blue line, we closed above the blue line. Okay, so at this point, normally I would issue a buy signal. Okay, however, what threw me off is the fact that dollar is also in an uptrend. So it's very unusual for both gold and dollar to be in an uptrend. Why? Because notice this currency pair is gold divided by US dollar. So if this US dollar part of the equation is getting fatter, bigger, it should pull this currency pair lower. Okay, and it was doing just that for a little while into November, and then all of a sudden it rallied. So right now I am sort of not exactly sure what's happening. Should I just ignore the dollar? Should I just look at the gold? If we just look at the gold chart, then we should be buying at the blue line. This was also my dilemma with silver. Here's XAG divided by USD. In fact, silver broke down into what I thought was a downtrend here in October, rallied towards the blue line, was rejected there on October 20th, again continued lower towards the red line here, and was rejected yet again in November 10th, November 13th here. So notice what happened. We dropped below the red line. We didn't close below it though, and we actually held support here. So, and then when we rallied. So notice that several days we were trying to get above the blue line here. So one on the 16th of November, 17th, 20th, 21st, 22nd, 23rd. Finally, today, on the 24th of November, Black Friday, notice big breakout for silver. So this technically would mean a buy signal for silver. I am, again, somewhat reluctant to go ahead and enter here just because I want to see what's happening with dollar. So if the dollar, like I said, I'm going to show dollar again. If dollar all of a sudden rallies from here, silver will come under pressure. But dollar could also drop towards the bear market levels, and they're not that far off. They're just like less than percentage away. So if DXY drops towards red line, which is 102.49, which is about not even a percentage point away from current price action, then I think gold and silver will indeed benefit, and this signal is valid. We will see what happens literally next week, most likely. Finally, I wanted to wrap up today with natural gas. So make sure when you're analyzing natural gas, you use this symbol, NG1 exclamation point. Okay. And in no circumstances you should use UNG. UNG is a trading vehicle. It is not used for analysis. Why? Because it slips. So it doesn't follow the price of natural gas exactly, because it is built using futures and I believe options. And there is a rolling over costs, and UNG does not represent exact price actions. Because notice that UNG is currently at, I think, all-time low, while natural gas price, the actual price of the underlying commodity, is not an all-time low. Okay, so notice that this right now, natural gas is attempting to bottom at this yellow line. It's kind of having trouble, but what I want to do is I want to project the price project my indicators into the future. And so what you will undoubtedly notice on this chart is the fact that the lines are getting closer together. Okay, so currently, right now, the distance between my yellow line and the green line is 124%, or $3.5. Now, in the not so distant future, in January 17th of next year, this same distance between the yellow and the green line is going to be only 51%, or $1.14. Okay, so this is called a narrowing of trading range. And quite often what happens is when we see a narrowing, especially of such magnitude, we are expecting a change of trend. So currently natural gas is in a downtrend. It began its downtrend right there where I'm hovering. I actually shorted it myself on 19th of December 2022. So close to a year ago, actually, exactly a year ago. It collapsed from $6 to like $1.90. Okay, so right now it's been trading, pretty much sideways to slightly up, and now again notice that we're seeing this narrowing of trading range. So what does that mean? It means that the price doesn't need to travel towards the blue line, which is like 87% away, $2.5 away from current price levels. In the future, it can simply trade sideways and close above the blue line. Okay, and if that happens, that means natural gas is in an uptrend. We may expect a pretty strong move higher. And if you ever traded natural gas, it's not for the faint of heart. We could see a significant move higher. So we're anticipating trading into of a natural gas probably into January, early January, mid-January, to possibly continue down, and then we'll see what happens at that point. If we make new lows, then this entire trading range narrowing doesn't make any difference. So if we make a new low, then we actually might continue lower. But if we don't, and we just kind of trade sideways, we might see a breakout into a new uptrend if we close above this blue support resistance line, which is not that far off from today's price level, but it is still time-wise away, about a month to a month and a half before the resolution. So we're watching for a resolution for natural gas into January, February of next year. Head over to MasterChartsTrading.com, click on sign up for one of the products. So the trading indicators, you can see them on this chart, are available for TradingView.com. This is a TradingView.com interface. It's online. All you need to do is get a free TradingView account, then come to my site, sign up for the indicators, and I will open the door for you on TradingView.com so you can see the same chart, same type of indicators on your chart. You can also sign up for newsletters. So I send out daily newsletters and weekly members-only videos. So for example, this week we will cover all of these various securities, such as crude oil, Bitcoin, various ETFs, foreign ETFs, large cap stocks like McDonald's, Travelers, Verizon, gold-related, as well as various speculative stocks like RealReal, Marqeta, Carvana, and Airbnb. And that is a newsletter. Also, the best deal is to get both trading indicators and newsletters. That's $59.95 per month. I am going to finally integrate a yearly subscriptions, and the yearly subscription will be 2 months off. So, it's, for example, if you're getting a newsletter, it's $39.95 per month, but if you sign up for a yearly, which is going to be very soon available here, you will only pay $399.50 for 12 months, so you get 2 months free. So stay tuned. I will hopefully do this today. That's it for this week's recap. Again, if you have any questions, please make a comment below this video. Hit the like button, share this video. These actions are what keeps the channel going. Thank you for watching and have another great trading week. Bye-bye.